Hey folks, welcome back to the challenge where I'm trying to make $10,000 in 1 year. And I have an interesting update today because I actually lost money over the last week. But it may not be all that bad because sometimes a little pullback is a healthy thing, especially if it's a price drop in the underlying. So just to recap what happened last week, I sold two Google put options here for $9 each, and then I sold one call at $98. And after commission converted to Canadian dollars, I ended up with $148 for my net premiums, which is 1,134 in total. Last week, the implied volatility wasn't that high, but this week the IV is higher, so I'm expecting to make a little bit more in premiums. Google ended the week at $117, so both my puts and calls expired out of the money. But because the price of the stock dropped from 121 to 117, I lost about $400 US. So even with the net premiums overall, my total gain loss went down about $400 Canadian. So that's why there is this drop here. So for this week, I think I'll make at least $200 in net premiums. So I'll explain what I plan to do this week for Google using TradingView here. So last week, which was over here on August the 15th, I said that it was a Monday. And the reason I sold a call option at $122 strike is because I thought Google was going to drop since it was very close to the upper bound of this channel. And with a measured move down, I calculated the lowest price Google might fall to would be 114. And then this is what happened last week if I played this. Google dropped, right? So I was finally right. I was anticipating a downward move, so that's what happened. Even though I was wrong for the first few weeks, I thought Google would drop earlier, but I guess now is better than never. So this leaves us at an interesting point, right? Because Google today is trading at about 115, which is right at this middle blue line here, which is in the middle of this channel. So because we've been going up and down, up and down, up and down, and every time we do that, we've basically hitting the tops and bottom of the channel. I do expect this to continue going down. In previous weeks, that seemed to be the pattern, so I would expect this to continue. Usually if the stock bounces off the EMA, then that means we're heading higher. But in this case, we've gone through the blue line, so I would expect the price to pull away from the EMA and continue its downward path. In terms of how low it can go, this seems to be the angle that Google likes to drop. So if I take that and move it over here, we started pretty much last week. And it looks like by the end of this week, which is the 26th, we could go all the way down to, it looks like 107 or 106. So I'm probably not going to make a lot of premiums on the put side because I will be setting a pretty low target. However, on the call side, we're at 115 right now. I don't think we're going to bounce off of this middle line here and go up. It looks like we're going to continue going down because there was a lot of selling pressure last week and also this week. You can see the gap down. Usually if we have a gap, we don't automatically gap back up. We continue the trend downward, at least for the next few days. I can probably set a call strike somewhere around the 117 or 116, slightly above today's price. So let's jump into interactive brokers. Okay, so at 116, which is basically $1 more, I can make $1.21. I'm going to go with 116. You can see the delta here is 41, which is quite high. I mean, it's still more likely to expire out of the money than in the money, but that is getting pretty close to a 50-50. So I'm going to sell that at 116 because I'm pretty confident the stock, even if it goes higher, it won't go up much higher than 116. And then on the put side, I'm going to sell a couple of puts just like last week. For the price, maybe I'll choose like a 110. I think that is a pretty good price for Alphabet shares. I would pay $110 for Alphabet all day, every day, if I could, because a year from now, I strongly believe this is not going to stay where it's at. Okay, so I actually learned about this recently. When you're putting together an option strategy, you can actually change the number of contracts of each leg. Right now it's a short strangle because I have one of each, but I'm going to enter 2 for the number of contracts for my put option. And then, so now it's sort of like an offset short strangle, but I don't know if there's a common label you can use for it. So even though this quantity says 1, it's actually 1 set, which means 1 call option and 2 put options. Okay, and for the price, I will go with, let's say 182 for the bid. Submit that. It's probably down to 179 now. Okay, I'll drop that down a little bit more.
Order filled.
There we go. Okay, so it filled at 1.78. Okay, let's check back next week and see how this trade went. There's a good chance the call option could get called away if Google just goes up by $1. And also, if it continues to drop, then I could be owning 300 shares total of Alphabet because I already have the 100 shares from before. So yeah, thanks for joining me today, and I'll talk to you in the next one.